Good morning, TGO traders and investors. Whiz here with your Wednesday market SITREP. And before I get operational and tactical and talk about what's going on here in the United States, of course, our liberal media is more or less ignoring another just awesome event out of the Middle East. Couple more 100 Syrians dead in a chemical attack. Now, this one is a little odd, because it happened just as UN chemical weapons experts were checking into a Damascus hotel a couple miles away as they were getting ready to start their mission looking for chemical weapons. So Assad, I think the guy's a complete idiot and a despot, but he'd be more of a fool to do this just as the guys were showing up, right? So maybe the rebels and Al-Qaeda did this, which should freak you the hell out even more, because if chemical weapons are not just in the hands of the Assad regime, they're in the hands of rebels. Guess what? Those things, Al-Qaeda gets their hands on them, which they most likely already do. They end up in the subway in New York City. Holy terrorism Batman. So again, our feckless Middle East policy is going to get a lot more people killed as the president talks to the 72 Dolphins today, and Egypt implodes and Syria's got chemical weapons flying all over the place. Just absolutely unbelievable. Okay, I'll move on. Folks, the economy here in the United States, really, the market action this week is going to be symptomatic of what we're going to see going into September, October, or a prelude to see what we're going to see in September and October. Market's up 50 points, market's down 50 points. Everybody thought, hey, wow, we got a nice little rally yesterday. The all clear sounded. Well, no, you'd be nuts to think that. We really are not doing that well with our economy, and our Fed today, one of the big things to look at today are the release of the minutes from the last meeting, the FOMC minutes at 2 p.m. Now, obviously, the market's going to whips all over the place when those minutes are released. You got high-frequency trading systems that can read those minutes and figure out it's nuts what's going to happen. We're gonna flop around like a dead fish, or a fish out of water, because dead fish probably don't flop. As these minutes are digested by the market, doesn't matter. We're all eyes are going to be on the Fed, and obviously tomorrow and Friday we have that meeting in Jackson Hole that I discussed on Monday over at Wealth Creation Investing. With all the central bankers, not all the important central bankers, right? Bernanke's not going to be there, Carney's not going to be there, Mario Draghi's not going to be there. All kind of their lieutenants will be there, but you get a lot of lieutenants in a room and throw in some alcohol, and you might make some news. So more volatility going into that meeting. We'll see, obviously. And we also get, this morning, we're going to get existing home sales. Thursday, we get our weekly unemployment claims and some manufacturing PMI. The Conference Board's leading index. And then on Friday, really not too much except existing home sales. Now, when we talk about home sales, Lowe's came out with earnings today. We saw Home Depot earlier in the week. Lowe's pretty strong earnings, showing potential strength in the housing sector. That's what all the 500-pound heads will tell you. I tell you, it might be a sign of the housing sector, but more importantly, it's a sign that people don't want to pay money to have somebody fix something in their house. That's usually neglected by the folks on Comedy Central. It points to the strengths of the housing sector. Really? People go to Lowe's and buy stuff to build their own house? They don't. So take what you see on Comedy Central with a grain of salt, folks, and think about why you go to Lowe's or Home Depot. I go to Lowe's or Home Depot to get stuff for my garden because I don't want to pay a gardener to do it. I have teenage boys. They can mow my lawn. I go to Home Depot to get a bunch of stuff that a handyman I used to pay to do. I don't pay anymore. So just take that stuff with a grain of salt. More indicative of what's going on in our economy, I think, is Staples. Huge miss out of Staples. Now, yeah, a lot of weakness overseas. But again, ignoring what's said on Comedy Central, as a small business owner and a guy who knows a lot about the business world, obviously due to all my consulting that I do, weakness at Staples means weakness in small businesses. And I had to laugh just dryly at an article I saw out of California. California is coming after small businesses in their state, demanding back taxes for the past 5 years. California, passed some great small business initiatives. A court overruled them last year or recently and said, yeah, now you can go get hundreds of millions of dollars from small businesses in back taxes. So these small businesses made investments in that state 5 years before, and now the state's coming after them for back taxes. Just absolutely unbelievable. Now, yeah, the legislature is trying to rush and get it back into law or fix what the court ruled, but it's indicative, folks, of how small businesses are treated in this country, more or less the enemy of the state. The president fights for tax cuts for Apple, Google, who don't pay any taxes anyway, GEs, and goes after raising taxes to 40% on small businesses. So that's why, the attack on small businesses and Obamacare, we're never going to get out of this economic Vietnam. Look at Target. Target's earnings, they're down pre-market as well. So you got a Staples on the small business side. You got a Target and a Walmart last week, right? So Target this week showing weak sales. That's why the futures are indicating down, and I think we get back into this chop that we're going to see until the Fed really announces what they're going to do in September. So stand by for more volatility, folks. Stand by for the minutes this afternoon to be released, and hold on to your hats. If you thought the all clear was sounded yesterday, you should have been live trading with me here at Top Gun Options, because I said it absolutely wasn't. Okay, so be prepared. We put on a good bullish double vertical on SDS out to October as a nice hedge in our primary live trade brief model portfolio, and along with an existing bullish double vertical on the VIX. Either way, folks, I think volatility is going to rise going into, look at the rise in the VIX going into the June Fed meeting. We went from essentially our resting heart rate of around 12 to about 21, even a pop close to 22, about a 10-point rise, nearly 10-point rise in the VIX, leading to the June Fed meeting, which we thought was important. All eyes are on the September one. So if volatility doesn't, you're already starting to see it do its climb here into the September meeting. Is it, in my opinion, you cut this out right here, copy, paste, put this on the right side of the chart, and I'm really looking forward to our bullish double vertical doing really well in our primary live trade brief model portfolio. Okay, guys, got to trade the open. I'll talk to you all later. Happy hunting. Make sure you hedge, and I'll see you for Thursday's SITREP here at Top Gun Options.